In today's video, I will show you how to file taxes on TurboTax. Please use the TurboTax link down below so that you can follow along in this demonstration. It's just going to make your life so much easier because I'm going to walk you through step by step this entire process. It's going to be so much easier if you're looking at it on your screen, same as me. So that link that I'm leaving you down below, if you're going to file your taxes for free, because there's a free edition on TurboTax and there's a paid edition as well, it's going to be the same thing. Regardless of whichever one that you're trying to use, it's going to be the same link. So use that link, and whether it's free or you're going to have to pay for it, it's going to depend on your activity in your tax return. But regardless, use that link. It's the same. Okay, so when you click on that link, it's going to lead you to here. This is what you're going to see. It may not be exactly the same. They may have changed the picture or moved things around, but ultimately you're just looking for this button right here where it says start for free. So let's click that. Come on. Okay. So it says, do you have a TurboTax online account? And if you don't, so let's just say no, that you don't. Okay, so they're going to ask you the basic questions. This is the start. Okay, so first of all, they're asking you these questions so that two things. One is to see if you're going to qualify for the free edition, to see your price. And the second thing is so that they can ask you the relevant questions that you need to complete your tax return. So here, let's just review some of these. So you want to maximize your deductions and answer yes or no, because some people have no taxable income and they're not looking to maximize their deductions. But in your case, let's just say that, we are. I want to maximize my deductions. So let's select this. But notice this. You see that? You no longer qualify for the free edition. So you can unselect that. See? So if you have a W-2 job, so if you're going to do a W-2 on your tax return, it's still free. But if you click on this one, you want to maximize deductions, you no longer qualify. It's a $39 upcharge. Okay, but let's walk through these. So you want to maximize your deductions. You have a W-2 job. You're employed. You work for a company. You get a W-2. And we're going to report this. In our example that we'll walk through, let's just say you do have unemployment income. And they're asking you, did you pay rent? Are you a renter, or do you own your home? Are you a homeowner? The reason why they're asking you this is because if you're a homeowner, then you may qualify for the mortgage interest deduction, property taxes paid, these itemized deductions. That's what they're getting at. So in this example that we're going to walk through, let's just say that yes, we do, I do own a home. And they're going to ask you if you have children or dependents. In this situation, let's just say yes, because there are deductions, there are tax credits that you will be qualifying for. So this example, we'll say yes. We did donate to charity, so we'll say yes. In this example, we'll say that we did sell stocks, we did sell crypto. We'll run through a lot of investment examples. We won't do, so notice that, see? We went from $39 to, if you're going to do investment income transactions, it's going to get upped to $89. Rental property, we'll just say no. Freelancer, gig worker, no. We won't do that. Self-employed, no. Independent contractor, no. We can dedicate a separate video to these scenarios because there's a lot that goes on here. Other income or Schedule C, the income, the expenses, and all that stuff. So this example, we're not going to run through that. Okay, so here they're asking you if you want assistance for your tax preparation. So here, this is the do-it-yourself version. And then there's more assistance here. This is like the recommended version because you select this one. If you unselect that one, then you're not being referred to this one. But it's just, this one has more hand-holding, more guidance. You get the live assistance, you get the full service on this one. Obviously, it's going to cost you more. But if you want to do it yourself, which is what we're going to do in this example, in this video, it's going to run you $89, okay? Okay, so I unselected that. I want a tax expert to help you, help me help you with the taxes. It's going to be referring you to this one. So no, we're going to do it ourselves. I'm going to walk you through this. Okay, but it's going to say start for free, right? So just completing this whole tax return and just running through the process, it's all free. You're only going to pay for it when you file the actual return. So you can end up deciding that you want to do your return, but you don't want to file it with TurboTax for whatever reason, then they're not going to charge you anything. So to start and get this process going, it's all free. And of course, if you qualify for the free version, then you literally will not pay anything. And I just want to say that this video, it's not sponsored by TurboTax. I've used TurboTax before. I used a professional grade software from Intuit. It's called Pro Series. Intuit is also the maker of TurboTax. So I really like Intuit. Again, this is not paid. This is not sponsored. There's no promotion here. I like TurboTax, just my honest opinion. So that's why I'm running you through this. Okay, so we're going to start for free. Let's click on this. And you're going to have to sign up for an account. So if you don't have one, then create an account, please. It's very simple. It's like creating and signing up for an email account. It's no different from that. It's very straightforward. Okay, so now we're getting started, and it brings us to this question, and this is very important. Do not overlook this. I'll tell you why. So they're asking you, how did you file your taxes last year? And this is super important because the tax returns from your prior year may have very important information. So I want to give you one example. Let's just say that you lost money in the stock market in a previous year. If you lost money in the stock market in a previous year, you're going to have a loss balance. And that's going to carry forward to your current year as a tax deduction. And you can use it as a tax deduction, and that's going to save you a lot of money. But that's why they're asking this question, because if you don't tell them about your previous year's information, then they're not going to be able to pull your information forward to this year, and then you're going to lose all of those benefits that you've accrued in previous years. So they're asking you how you filed your taxes last year, and they give you options. If you use TurboTax, if you use different software, if you use a CPA or accountants, if you didn't file other, but let's just say that you went to a tax service. And we'll continue. Okay, now moving along, they're going to ask you, where would you like to go? The option is personal taxes or business taxes. In this example, we're going to go with personal income taxes. So let's click on this one. Okay, now from here, they're going to ask you a whole bunch of questions, and these questions will be used to populate your income tax return. So says Brian, let's keep working on your taxes. I previously started entering this information. I was just tampering around as a preview for this video, but let's continue. I didn't get too far. So we're going to continue and answer these, of course, honestly and to your best knowledge, because this is the information that will be displayed on your tax return with the IRS. So you're going to enter in your personal info, very straightforward stuff. What's your social security number? What's your date of birth? What's your occupation? I put down professional hamster farmer. What state do you live in? You can choose your, okay, let's just dive into this. I don't want there to be any confusion. So the name, very straightforward, date of birth, social, your occupation. Your occupation really doesn't matter what you write, so don't get bogged down by that. It's not that important. As long as you don't put terrorist or something, obviously. They're going to ask you if you are a former member of the U.S. Armed Forces, what state you live in. They're asking you if you lived in another state in 2023, because if you did, you might be looking at a multi-state income tax return. It's more complex, but in this situation, we're going to say no, we just lived in one state. They're asking if another taxpayer can claim you as a dependent on their tax return. So for example, if you're like a child or basically if you're a dependent and someone's claiming you as their dependent, then they need to know about that because that's going to affect your tax return as well as their tax return, whoever's claiming you. But in this situation, we're going to say no. They're asking you if you are legally blind because that's a tax deduction. They want to know if you have passed away because you can file a tax return for someone else that has passed away. In this situation, no, I have not passed away. And they're asking about no, like we want to have this in English. They want to know if they should send you communication in a different language. But in this situation, we're going to write no. And we're going to continue. Okay, so this is your marital status, your legal marital status. And it's your status as of the last day of the year. So in this situation, we're going to write single. If you're, for example, if you're going through a divorce, but you're still married, then if you're still married on December 31st, then you would write married, even though you're in the process of going through a divorce. Okay, but if you want more information about that, you can click there, and then it'll help you with all the legality, the terms. But let's just continue. Okay. So they're asking your children and any other people that you support because dependents is not necessarily just kids, your children. It could be your parents, your grandparents. It could be your nephew. It could be whoever. In this situation, I'm saying that I have one dependent. We'll just say it's my child, my son. Name is LeBron. And, well, I just put LeBron James. So it's LeBron, born on January 1st, 2020, and LeBron is my dependent. And we'll continue. So in this situation, they're asking for your income. If you made any income in different states. So I said that I'm an Illinois resident, and I'm going to select that no, I don't have income in any other states. So we'll continue. So they're asking these questions to see what kind of tax deduction or tax credit that you're going to get for supporting a dependent. So that's what they're trying to get at. So did you pay more than half the cost to keep up your home in 2023? So I would say yes, I paid for more than half the cost. Okay, now moving along. So that is a summary of my personal information. Marital status, here are my dependents, LeBron James, dependents, their information. Okay, and this will be my mailing address. You can edit this, mailing address as well as phone number. You can edit it here. Very straightforward. And other state income, again, in this example, we're saying none. So we'll continue. Now here they're asking for year-round protection with max benefits. I'm going to say no, thank you. So how do I say that? So I say, okay, don't add max. Okay, now they're asking about the income and expenses. So we will do this one. We'll do the W-2. You work a job, and you're probably familiar with the W-2 form. We'll do this one as well. We won't do this one. That's more for independent contractors, gig workers, and whatnot. So we'll do this one, and the investment activity, the stocks, crypto, all that stuff. So let's get started. We'll start here. We'll start with your W-2. Let's work on my W-2. Okay. They're asking for the employer identification number of your company where you work at. This is all going to be listed on your W-2. You just match up the boxes. Look at your W-2, and they'll all be identified. You just input whatever questions, answer whatever questions that they're asking you. In this situation, let's just say I have no idea. I just wrote in anything. We'll continue. So you can actually take a picture of it, of your W-2, and just upload it with your phone. You can upload it from your computer. So those are options. But we're just going to type it in. So employer name, let's just say Clear Value. And the address is Chicago Streets. Zip code 60602, Chicago, Illinois. And this you don't need, it's optional. Okay, so look at that. This is all for your employer information. So you're going to see that on your W-2. Here they're asking for your information, but it's already been input because it's just pulling from the information that they already have on file for you, which you just filled out. So that's good. We'll continue. And just look at your W-2. Well, if you're typing this in manually, just look at your W-2. So box 1, I made $60,000. How much federal income taxes were taken out of your pay? Let's just say $15,000. Social Security wages, just look at box 3 of your W-2. $3,720. Medicare wages, just look at your box 5, 60,000. And that's going to be 1.45%. So $870 there. Okay. This is less common. It's going to be for tipped employees. We'll just, if you have something written there, just obviously input it. But in this situation, let's just say we don't. So here, don't overlook this. Box code 12, look at your box 12. Just input whatever's applicable. So let's just say you put money into a Roth IRA. A Roth 401k. And let's just say I put in $2,000. And if you need more lines, let's just say I put money into a 401k as well. I think that's D. So it's D. And let's just say you put $3,000 into a 401k. And then click whatever's here, retirement plan for us. And if you have anything here, please input it. You're going to see state income tax information. If you're in like Texas or Florida, you're going to have nothing there. It might say Texas or Florida, but over here, the information that matters, you're going to see nothing. So here, it's not really that important, but just type in whatever you see there. State wages, let's just say all our income was earned in Illinois, so 60,000. How much state taxes were taken out of your paycheck? Look at box 17. Let's just say we want a refund, so let's just say 4,000. Okay, if you have locality taxes, let's just say you live in New York City, that's one example, then please input this information over here. So continue. Here they want to check for uncommon situations. Let's look for a few of these. If you worked outside the U.S., for example, there's a foreign earned income exclusion. They're just looking for things like this. There's special tax treatment for religious or inmates or things like that. But here we're going to say none of these apply to me. Continue. For the smoothest ride, make sure all your W-2s are here before moving on, because you may have switched jobs, you may have worked multiple jobs, so make sure you see everything here. So we have just one job in our situation, so let's proceed. You can always add another W-2, go through the same process, but we're going to continue. Okay, so we're good. We're done with the W-2, the job that we worked. We're going to skip this. We're not going to claim any self-employment income or expenses. Unemployment, let's see how much, let's see how difficult this is. How much trouble they're going to put us through. Did you receive unemployment or paid family leave benefits? Let's just say, yes, I did. Where did you get your benefits from? Let's just say you got it from the state. So it's going to be a 1099-G. And let's just say that we were not required to repay unemployment benefits. So we'll continue. And again, you could take a photo of your 1099-G. You can upload the file from your computer. Accuracy check. What are they questioning about me? Let's check. It looks like a bunch of nonsense. This was left blank, the EIN. Oh, they're asking about the EIN of what we're going to fill out now. Well, I haven't gotten to there, so I'm going to X you out. Thanks for nothing. So let's continue. I'll type it in myself. Okay, let's just see if this works. Give it a shot. Oh, they took it. State of Illinois. State. Trying to type around the microphone, so please bear with me. The address doesn't really matter. Let's just see if they take this. Gotham, Illinois. Looks like they're going to take it. Okay, and that's my info, the recipient info, and that's the payer, state of Illinois in this example. So let's proceed. Box 1, how much unemployment compensation did you receive? Let's just say 5 Gs. Did they take out money? Let's just, sure, why not? You know, they took out $500, so I ended up with 4,500 nets. I got paid 5,000 minus the 500 taxes, so 4,500. But this is how much they took out. States, Illinois, state identification number. Just type in whatever you see on your 1099. And then income tax withheld. Let's just say no, Illinois didn't withhold any taxes. And just look at locality if you have it or not. If you want to add another one of these, if you have another one of these, if you move states, for example, you can do that here. But that's it. Let's continue. Okay, looks good. State of Illinois, unemployment compensation 5,000. We're good. Okay, so we got the job done. We got our unemployment done. Income from 1099 miss. You'll receive this if you're an independent contractor or if you have a side gig or if you have a YouTube channel, you know, you're self-employed, things like that. But here, we're not going to do it. We can dedicate a separate video to this because there's just so much stuff that goes on with self-employments. Now here, moving on to investment activities, you're going to get the 1099-B. For your brokerage account, you should get that in early February. The deadline's February 15th, but you should get that in very late January or early February or middle of February, in the first, second week of February. And that's going to list all your stock trades. This might be applicable to your crypto, depending on your brokerage account. But this is what we're talking about. Stock trades, interest income, dividends, 1099K, that's the payment processors, which, you know, we talked about, you know, the rule changes and all that stuff. And also crypto. But let's get started. Did you have investment income in 2023? And this includes interest earned, dividends, sale of stocks, bonds, etc., crypto sales, and other. Like you sold land, you sold home, properties, things like that. Okay, so our answer is yes, we did. Do you have crypto income or losses in 2023? Yes. Was the crypto you sold transferred between exchanges or wallets? So why does this matter? It's probably because of the cost basis. They want to make sure that the information, the gain or loss, is being reported correctly. That's why. So let's just say no. We kept everything, you know, in the same spot for buying and selling in that year. So did you buy or sell an NFT? Let's just say, yeah, sure, why not? Did you receive a reward in the form of crypto? Let's just say, okay, we received an airdrop. Let's just say, okay, yeah, let's do it. Did you participate in DeFi? Okay. Let's just say, yeah, got some interest income. being so nosy. Well, it's really the government. Okay. You can automatically connect your wallet to your wallet, your exchange. This is for experienced investors only. I got this. All right, I got this. Now they're saying that they got it. Okay, let's just continue. Let's go. Let's do this. Okay, so you can import all this tax information from your brokerage account. Let's just say from Robinhood or TD. TD just got bought out this year. It's now Charles Schwab. Everything from Coinbase to Fidelity to you name it. You can see there's more. So you can import it. You can import it directly, all your information. And if you want Wells Fargo Bank, they're talking about your interest income, things like that. Ally Financial, Wealthfront, whatever, you name it. Acorns, there you go. Okay, so that is probably the easier route. But if you don't want to connect, that information or for whatever purpose, for whatever reason, then you can input it manually, which let's take a look at that right now. Let's start with interest income. Oh man, let's just do it all. 1099-S, that's for things like you sold a home. We're not going to do that. Oh, okay, they're asking, I was getting ahead of myself. One at a time is what they're saying. So let's continue with interest income. You can upload the form as a file from your computer. You can send a photo, whatever you want. But I'm going to type it in myself. You can just look at your form. And it's very straightforward. How much interest income did you receive? If you received, under $10, a minimal amount, they're not going to even send you this tax form, the 1099 INT. But in this case, let's just say that we received $100 in interest income. Just look at the boxes, populate them, and we'll continue. Do any of these uncommon situations apply? No, none of these apply. Okay, so saying needs review. So this is a good example. What do they want to know? We found something wrong. This is the identifying information of the institution that paid you. So their federal identification number. I'll just make it up. But write in whatever it says on your 1099 INT. Received from Batman's bank. Okay. Boom. Again, none of these apply. Cool. Okay, so here's a summary. $100 of interest income earned from your bank. And we'll confirm. We got to go back all the way again. Okay, fine. Let's go back. Add investments. Let's see. No, we're going to enter it manually. Dividends. Okay, let's do this. Nope, I'm going to type it in myself. Who's the payer? Let's just say it's Charles Schwab. Type in their identification number. It's going to be on 1099B. Charles Schwab. And look at your 1099. It's going to be your 1099 div. Just look at box 1A. And let's just say that total ordinary dividends is $1,000, a clean 1,000. Qualified dividends really means how much of this gets better tax treatments. But you just type in whatever you see in box 1B. Let's just say it's $400 of the 1,000 gets better tax treatments. Total capital gain distributions. If you see something here, type it in. Just say $500. And continue. Boom. So simple. Do any of these apply? Nope. Continue. So look at this interest income, dividend income. Like we're doing great. Look at our investments. Crushing it. Okay, I don't want to go through that process again. So let's go to add investments. I don't want to make a big circle. Enter a different way. Stocks, bonds, mutual funds. It's really going to be focusing on stocks. in our example. Oh, what's this? They even show us a video. I'm not going to watch this video with you. Basically, you get your 1099-B. That's your tax form. Again, you're going to receive that in probably early February. But I'm talking about physical mail. You can download it from your brokerage account. Just go to your tax center. You could download it. And again, another way to do this is import it from your brokerage account. But if you don't want to connect your brokerage account, then you could type it in manually. A lot of times it's a hassle if you have a lot of trades. Okay. But actually not really, because you just write in the summaries. Your brokerage, let's just say it's Charles Schwab. You don't have to write in your account number. The EIN, you don't have to write that in. Tell us about the sales, about your stock sales on your Charles Schwab 1099-B. Do these sales include any employee stocks? So they're talking about restricted stock units, non-qualified stock options, incentive stock options. These are things that are related to your employment. These are not things that you're going to be buying and selling in your brokerage accounts like a everyday investor. These are stuff connected to your work. So if these things do not sound familiar to you, like employee stock purchase plans, then no, this is not going to be applicable to you. So we're going to say no. We're talking about you're just casually, just as an investor, buying and selling stock on the open market. So none of those apply. Do you have more than 3 sales on your 1099-B? Let's just say yes. I bet you they're going to upcharge you. I think it was $89 so far. Is there a way to check the price? They're hiding it. Okay. Anyways, do these sales include any other types of investments, such as land, collectibles? No, just stocks. Did you buy every investment listed on your 1099-B? Because they're asking this because they want to calculate your gain or loss. And in order to do that, they need to know how much you got it for, your cost basis, to calculate your gain or loss. And that can be affected if you inherited or were gifted the investments and you did not pay anything. So do you buy every investments? So yeah. Now choose how you want to enter your sales. So again, you could just write in the summary, the totals. That's what I would do. They're actually showing you how it's done because your short term and your long term, they're going to be summarized, and you could just type in the summaries. It just looks like it's repeating. Okay, so let's do it. Okay, so if you look at your 1099-B, you're going to see this summary. It's going to say short term. Just look at the classification and be careful. Read it carefully. Because it's going to be short. There's different types of short term and different types of long term. Like, I'm not going to try to confuse you. So let's just say that it's this one. Short term basis reported to IRS. So these are covered. Okay, so how much did you sell it for? What's the total sales proceeds? Let's just say all your sales summed up total $10,000. And the total sum of how much you bought it for was $9,000. So you made $1,000 profit in short-term capital gains. Continue. So the proceeds, the sum, $10,000. How much you purchased all of that for, $9,000. You can make adjustments if you want. If something's off, for example. Okay, so the gain, $1,000 a gain. Congratulations. And let's just say that you have another box to populate. Let's just say that you have long-term gains. So total proceeds, long-term gains, let's just say you sold $20,000 worth and you bought all those stocks for $15,000. So you made a $5,000 gain. So we'll continue. So long-term, just check your totals. So 20,000 in total sales, 15,000 was your total cost, and 5,000 was your profits. And I just want to show you this. Okay. So make sure you mark off the correct one. For example, short-term, there's multiple short-term. Short-term basis reported to the IRS. Okay, so make sure you don't confuse these. You might have information to report in this one and in this one, okay? So make sure that you're reporting it in the correct section, in the correct spot. Otherwise, this can trigger an IRS letter. I've seen it. I see it happen all the time. So just make sure you're reporting it correctly. I'll run you through an example. So let's just say non-covered, short-term basis not reported, so non-covered. And let's say the total sales in this section, these types of transactions were 10,000, but it cost you 12,000. So let's just say you lost money. You bought all these stocks, these types of stocks for 12,000 and you sold it for 10,000. So you lost $2,000 with these types of stocks. So we're going to continue and they're all going to net together. So for example, these types of short-term stocks, you made 1,000. These types of long-term stocks, you made 5,000. So these two combined, you're up 6,000. But with these types of short-term stocks, you lost 2,000. So your total capital gain in the stock market is going to be a net $4,000. That's 1,000 gain, 5,000 gain, 6,000 total, minus the $2,000 in losses. So we'll continue. Okay, so you're going to have to provide a copy of your 1099-B. Again, you could take a photo of it. The easiest way I would say is that you can download the PDF from your brokerage accounts. Very simple. Just go to your tax center, just download it, and you can upload it here. Or again, you could just connect it, your tax information, your brokerage account, the tax information, and then that'll be easy as well. So we'll skip this for now. Or you can mail it, snail mail. Let's just say that. Okay, so I think we have to run through crypto, right? Let's do crypto. This is interest income, dividend income, stocks. Okay, let's do crypto. I think that'll be the last one. So we'll do crypto. Type it in myself. Not going to watch this video. No, thank you. I can't really answer that because I didn't watch it. Okay, crypto service. Let's just say, let's just do Coinbase. Well, let's see what they got here. CoinJar, never heard of that one. Whatever, we'll just do that one. Account number, optional, doesn't matter. EIN number, don't know. Don't know the EIN of CoinJar. Continue. Did you get a 1099-B from CoinJar? No, I did not. That is the honest truth. Okay, now enter one sale for CoinJar. Your info should match your 1099-B exactly. If you have more than one, we'll do them after. What sales or transactions must be reported? Basically everything. Okay, so what type of investment did you sell? We sold a crypto. Okay, we're in the right spot. How did you receive this investment? You bought it. I purchased it. What are the other options? You inherited it. Divorce settlement, received as a gift, short sale, something else. So I bought it. Description, BTC. Let's just You know what? Let's make it Turtle Coin. When did you receive this investment? They're asking you, when did you buy it? When was it acquired? Let's just say, we'll make it just do January 1st of 2020. 2020. Let's make it long term. Date sold. Just say June 1st, 2023. Sold it for, let's just say, 20 grand. Cost 1,000. So you made 19,000. Good thing it's long-term capital gain. Better tax treatment. Let us know if any of these situations apply. I paid sales expenses. They want this is for a cost basis, but let's just say none of these apply. Okay, so description, Turtle Coin, date that you sold it. Okay, and they got this because we entered the day that we bought it. So they auto-calculated its long-term capital gain because it was held for longer than a year. Sold it for 20,000. We bought it for 1,000, and the gain is 19,000. Excellent. So you can modify it if you want. You can delete this if you want. We're going to continue. Okay, I think that's it. So again, you could import all this information from your institutions. We did it the manual way, but as you saw, it's not that difficult. It's very straightforward. I mean, I just walked you through all of it. Another way is you could take the picture of it. You could upload the PDF. But that's it. That's all the investment income. Interest income, dividends, stocks, crypto. See your capital gains and tips. What? I have videos on the tips. Let's see what they say. Your capital gain. We did good this year. It's a tax on this income. Okay. So here are the tips. They're talking about tax loss harvesting. They're talking about better tax treatment for long-term capital gains. There's even the 0% rule. Investing through tax-deferred accounts, such as a 401k, retirement accounts, IRA. And there's ways that you can manipulate better tax treatment by... They're talking about basically FIFO, LIFO. But I wouldn't worry about that right now. Okay, they did a good job. I'll give them that. Okay, we'll go back. And we're going to confirm. That's great. Okay, that's awesome. Okay, look at that. So we got through a W-2, your employment income. We got unemployment income. And we got investment income. That's awesome. We're going to continue. Look at that. Look at that. They even gave the celebratory, all that stuff. So 11,065. That's great. Let's click on this. You're on track for this $2,000 credit. That's for the child. That's for LeBron James. It's great. That's helpful. Thank you. I need that money. So we're going to continue. Okay, man, this is great. Taxes are easier with experts by your side. I'm sure they are, but it's going to cost you more. So we're going to continue. They're trying to upsell you here. Okay. How much is this? No, we don't want this. This has more boxes checked off. No, we don't want this. Well, okay, let's premium plus max, an assisted premium. And then I think that this is what we're going to go for. We're going to continue with this one. Continue without additional benefits. Going solo. Our tax experts are here if you change your mind. Thank you. Continue. Did you have a foreign bank account, trust, or financial asset in 2020? We're going to write no. If you did, you have to report that stuff. So we're going to write no. Did you take a disaster distribution? No. You get their special tax treatments and all that stuff. We're going to write no. Time to find all those tax breaks. Let's do it. Uh-oh. I'm seeing that we owe Illinois money. That's not good. But our federal tax refund's $11,065, looking good. Let's find these tax breaks. Did you contribute to a traditional IRA or Roth IRA? Well, if we contribute to a Roth IRA, then we're not going to, you got to report that, but it's not going to help you. But traditional IRA, that may or may not help you. Okay, let's just say, yeah, we did traditional IRA. Foreign taxes, no. Actually, this might help you. Look for your foreign taxes on your dividends, on your 1099B. Make sure you don't overlook that because you might actually save tens of dollars or even a few $100s. So just don't overlook that on your 1099B. But in this situation, we'll write no. Did you make any estimated tax payments? We're not doing self-employment income, that stuff, so we're going to write no. Did you pay for child or dependent care? Let's see. Yes. Do you have an HSA? Okay, fine. Yes. Did you make energy saving improvements to your home? If you did, then check yes and just answer the questions. In this example, we're going to do no. Car registration fees, this might be applicable to certain states. In this situation, we're going to write no. Student loan payments, okay, yeah, let's do that. Medical expenses, okay, fine, sure. Do you need to report your health insurance premiums? Okay, in this situation, if you do, okay, you know what? Let's just do it. Oh man, there's a lot of questions. Now it's time for that. This is not fun at all. This is not fun, but it's a necessary evil. So let's do this. Okay, we're going to start. Okay. So if you own a home, you can get these deductions. This is going to be on your 1098 tax form. So your lender, whoever has your loan, your mortgage, they're going to send you this form by the end of January. If your mortgage got sold to a different servicer, or basically someone else bought your loan, multiple institutions, and you'll get multiple of these 1098 tax forms. So look out for all of them. Did you pay any home loan? Did you have a mortgage in 2023? Yes. You could import that information if they're listed here. You can take a picture of it. You can upload it because you can go to, let's just say you can go to Wells Fargo, download your 1098 tax form and upload it here. That's another way to do it. Or you can type it in yourself. Lender's name, Wells Fargo. So no, none of these uncommon situations apply. Mortgage interest, look at your box one. You pay $15,000 in mortgage interest. Okay. I don't think you really have to write this stuff. But please write this stuff. I'm just trying to do this as quickly as possible. Well, are you serious? They're asking for this? Okay. Did you have any PMI? No. Real estate taxes paid. That's important. But make sure that's accurate. Let's just say that's $12,000 property taxes. Okay. Don't give me errors. Outstanding mortgage principal. Okay. Because there's limitations. That's why they're asking this. But for this example, I'll put in an amount that will not limit me. Okay, is this loan secured by a property that you own? We'll just say yes. What kind of property is this? Let's just say it's for your primary home. Do you pay points in 2020? No. Is this 1098 the most recent for your loan? Again, you may have multiple. And if you have multiple of these 1098s, then you have to report all of them. And this is for your benefit because you want to get all the tax deductions that you can. Okay, so they're asking if this is, what is this? Is it a HELOC, a home equity line of credit? Is this for, is this for something else, refinancing? But no, it's not. It's just straight up loan on the primary residence. Okay, so we're going to qualify for this. Yay. So we're going to get the mortgage interest deduction, the property tax. These are itemized deductions, and already, we're going to be getting a bigger tax break. Oh, look at that. See, the refund went up, if you remember, because our itemized deductions are already greater than our standard deductions. So we're going to continue. Boom, knocked out 2. That's great. Okay, let's go to children. Let's check out for child and other dependent credits. Okay, let's do this. Do you have any of these uncommon situations? No, I don't. Okay. Okay, good news. We're going to be qualifying. I wonder if that's already part of this $12,000 refund. Okay. It's great. It was already part of it. Dependent care, let's just say, okay, I'll show you this. So this is for daycare expenses or childcare expenses, but it could be for an adult as well, dependent. But let's just say it's for my child, LeBron James. Did you pay for child dependent care in 2023? Yes. Whose care did you pay for? Okay, so listen, if you pay for, let me just answer this. Oh shoot, no, let's go back. Oh no. Okay. Should I just, okay, let's hit the continue button. Let's see if it takes me back to where I left off. No. Oh man, what a hassle. Will this work? Oldest trick in the book. Oh my goodness, you gotta be kidding me. All right, let's just go back. That's what I get. Okay, dependent care, we're back. Actually, very easy to navigate. Did you pay for dependent care? Yes. And this is for LeBron. I don't know why it's so difficult to read. Whatever. Let's continue. Total dependent care. How much did you pay for child care? Okay. Let's just say LeBron's expensive. Let's just say we paid $12,000. But there's a cap. If you're over the cap, then they're just going to let you use the maximum amounts that you can deduct or get a credit for. But if you're under that cap, then they're just going to, let you use that amount. But just write in whatever you spent. Continue. Okay. So we spent $12,000 on LeBron for, let's just say, daycare. And they want to make sure it's legit. They're going to ask you for this information. Daycare provider. Okay, enter in their information. Enter in their address, their city, Gotham City, state, Illinois. Why did they make the text so difficult to read? Total paid to this provider. I think. Okay, because it could have come from multiple providers. Let's just say we just had this one provider is $12,000. Is this care provider your household employee? No. Like a nanny? No. Okay, we're just going to continue. Okay, done. We're asking about care receipt in 1 year. Okay, right now. Okay, but do you remember that section? I gotta take you back now. So do you remember this section? Where is it? Okay, edit. There it is. Continue. Okay, I'm not going to try and navigate this. Basically, it has to be a qualifying provider. Like if you paid your mom or your sister $12,000, as a regular person, watch my kid, watch LeBron, that's not going to qualify. It has to be a qualifying. It's got to be a qualifying provider. Like if yes, your mom or your brother, they can qualify if you report it to them as income to them, but if you're just going to do it like any normal human being, like, hey, here's some money, or just like, hey, just drop off my kid, LeBron, and just watch my kid, you're not gonna get the deduction or credits. It's got to be through a qualifying institution, or it's got to be a qualifying setup, basically. So that's why they were asking you for the EIN, so like a qualifying EIN or qualifying social security number. So that's why you can't just make up, random information, false information. So I just want to say that. But of course, like a daycare facility, that's obviously going to qualify. So we're good here. Okay, can we just continue? Okay, good. Man, look at this. We still got a ways to go. Donations. Did you give money? Was it monetary or was it just goods like toys, clothes, furniture, appliances, mileage, for example? Okay, but yes, we did. Who did you donate to? A qualifying charity. John Doe's charity, my friend. You can write items or money. Oh, man, let's just do both. Okay, you know what? Let's not do this. But if you donated items, let's just say clothing, they're asking for the value. Just, use your best judgment. They can help you with Guide Me, or you can value them yourself. Again, use your best judgments. But basically, you're going to put a value on it, and that's going to be your deduction. It can't be too outrageous, otherwise they're going to ask you for an appraisal, like a legit appraisal, but the software will notify you if that's a situation. Okay, but let's make it easy. Let's say that you donated money, a one-time donation of $700. Very generous. So done with this donation. Good. Okay, we'll just leave it at that. Student loan interest paid. So this is going to be a great deduction. You're going to get this on a 1098E. 1098E. Okay. You can claim this if your name is on 1098 form. Yes, it's in my name. You can upload the PDF file or the JPEG or whatever it may be. You can take a photo of it again, but we're going to type it in ourselves. Just look at the name of the lender. Government. Interest paid, how much? So the whole payments is not a tax deduction, but the interest paid is the deduction. So let's just say the interest that you paid was $1,800, $1,800, and that'll be the deduction. So that's great. Okay. Look at that. Our refund's going up because we're getting all these deductions. HSA. Okay, they're asking about these. Just say HSA. Did you use your HSA to pay for anything in 2023? Let's just say no. We did not inherit the HSA. Okay, fine. We put money into HSA. Okay. Okay, so remember when we were filling out the W-2, in that box 12, we did the Roth 401k, we did the regular 401k. If you put money into an HSA, so if you had HSA contributions, that would show up in box 12, and that would have impacted your W-2 figures, and basically you would get a tax deduction that way. So they're asking if you made additional contributions not through your employer. So we're going to write 0. But basically, if you write this correctly in your W-2 section, then you're going to get the tax deduction over there. So in this case, we're just going to leave it alone. We're going to continue. Okay. Yes. But it's not going to matter. Just answer these questions to the best of your knowledge. No, we did not overfund your HSA. If you overfund your HSA, that's an issue, and you got to rectify that. So here it's not showing up as a deduction because we're just assuming that you input it through your W-2. But we're going to be done here. Medical expenses. So let's start here. They want to know if you have a certain amount of medical expenses, because if you do, then it will become an itemized deduction. And that depends, that certain amount, that threshold, it depends on your total gross income. So it depends on it's basically based on your income, and it depends on your situation. So in this situation, for our situation, if we have more than this amount on out-of-pocket medical expenses for this year, then it will help us with a bigger refund. It'll be a tax deduction, itemized deduction. Did you spend more than this amount? Let's just say yes. And here are examples on what they're talking about. So it's anything above that amount that was listed. So I think that was like $6,700. So anything above that amount will be a deduction. So if we do $7,000 in prescription expenses, it's going to be that the difference, like $300, will be deductible. So we'll continue. Say no, 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 no. But they're asking you about all these expenses. You can walk through it. Crutches, oxygen, hearing aids, just things like that. Okay, even medical travel, that qualifies. Okay. Okay, they're asking about all this stuff. And it just goes on, Go at it. See, your medical expenses, your deduction is $284. It's about $300 because, again, it's the amount over that threshold. Okay, so great. Affordable Care Act, so 1095A. I'm not going to go through this, not this part. If you have a 1098, please. Okay, fine. You know what, man, let's do this. Just enter in the information that you see on your form, your 1095A form. And, okay, you know what? I'll tell you. This can be important because just fill this out. This can help your refund, but it's obviously going to be very dependent on your situation. But just please fill this out. You don't want to overlook this. But in this situation, we're going to pretend that you're getting health insurance through your employer, through your W-2, it's listed on your W-2 and all that stuff, and we're not going to fill out this 1095A. Because in certain situations, a 1095A will help you, but in other situations, it will not. But please fill that out. Traditional and Roth IRA contributions. Let's just look at this really quickly. Again, if you put money into a Roth IRA, that's going to be something that you report. It's not going to help you for tax deductibility and all that stuff. If you take money out of the Roth, early distribution, things like that, then you're going to have to report that. But in this situation, let's just do a traditional IRA because sometimes, depending on your situation, your income and all that stuff, you might get a tax deduction. So let's continue with this. Did you contribute to a traditional IRA? Yes, I did. Is this a repayment of a retirement distribution? No, it is not. Tell us how much you contributed. Say $4,000. Okay, so for this one, you have until the tax filing deadline because most of these tax deductions are calendar year. What you did last year from January 1st up until December 31st, but this one, they give you more leeway, and it's up to the tax filing deadline. But let's just say we did the $4,000 contribution last year, so we're going to write 0 here. So $4,000 contributions to traditional IRA last year. Continue. Did you change your minds? No, we didn't. They're talking about you converting money. It's called recharacterization, but no, we didn't. Any excess? Did you put in too much money, more than you're allowed to? Nope. Okay. how do I explain this? So, okay. Sometimes in your IRA, you're dealing with pre-tax money and other times after-tax money. And sometimes it's a combination. You have money that's mixed in your IRA that's pre-tax money and after-tax money. And we're not going to get into that. So we'll just do no. Okay, so here's an example. Our modified adjusted gross income is above the limit that allows us to receive a tax deduction for putting money into an IRA. So we can still put money into an IRA here, but we just don't get the tax deduction, which sucks. That's why this refund has not moved up. So let's continue. Your IRA deduction, sad. Whatever. Okay, we're done with the tax breaks. Home buyer credits, this was something back in 2008 and other years, but nope, it's not applicable to us. No, sir. Okay, you just told us that we didn't qualify. You don't have to kick us when we're down. Okay, IRA contribution results. Okay. Yeah, I told you we're itemizing our tax deductions because it's going to be higher than the standard deduction. So it's great. Did they tell us the price? How much it's going to cost us to file? Not yet. All right, we're going to continue. Let's do a quick check. Okay, let's do it. Keep going. No. No, we don't have a nanny. No, we don't do that. Well, we're not giving. That's my $3. No, I do not want to. No, sir. Do you experience identity theft? Okay, so I've seen this a lot actually, but answer this appropriately if this is applicable to you or not. Here, we'll just say no. Continue. Let's keep going. Look at this progress. I don't want to do state taxes, not with you guys, because I'm not going to walk you through an Illinois tax return for people that live in 49 other states. So please don't make me go through this. No. We're not going to do this. I'm going to fly through this. Oh, it's going. I wanted to see it go, actually. Okay, come on. Yes. Let's fly through this. Cook County. Where are you at? No. Oh, let's see. Well, it says here I owe $193, but you know what? Don't care. Nope. Yes, it was. Okay, I'm going to get a tax credit. Let's do this. Yes. Okay, come on. Oh, bam. Look, Illinois refund. Thank you for the property tax credit. And if you want to claim that credit, you got to put this information in. I'm going to bypass that. See ya. Boom, $600. That pumped me up to a refund now. You see that? Okay, education credit. No. We're not doing this. No credit. Fine. Okay, well, I just walked you through Illinois. I guess not done yet, but you know what? We're going to continue. See ya. No, we're not donating anything. Not to Illinois or affiliated organizations. Have you ever done tax in Illinois? Yes, but I'm going to write no. Health insurance, I don't care. I don't want to check it over, but okay, continue. Oh, look at that. That's a total refund. Federal refund, this with the IRS, $13,080. Illinois refund, $407. Okay, so you have the option to just file your federal tax return. And that's, obviously if you're a state with zero income taxes, you're just going to be filing the federal. But you have the option to, if you don't want to file your state tax return because for whatever reason, you don't have to. So you can file your federal, your IRS, federal, and state together, or you can just do just the federal, which is this option. Okay, nice refund. You can add more states if you're going to do a multi-state return if you earned income in multiple states. In this case, no, we're done with states. We're not saying that. Okay, continue. Can't believe I just walked through a whole tax return with y'all. Okay, well done, Brian. Continue to lock in today's price. Let's see what that price is. Anyone want to take a guess? Review your order. Okay, let's do it. What's my order? How much is it? Okay, we know this. Trying to get us excited. here's where they get you. Okay, so look at that. They're charging $39 for the states. Where is this savings is because these got chopped down apparently. Okay, so it's going to be $128 to file all of this and get this refund. You saw how the price got jacked up when you were adding the additional things such as the investment sales, stocks, crypto, things like that, or the deductions, things like that. So I don't know what the price is going to come out for you, but this is what it's going to cost with the state for doing all those things, the deductions, the W-2, the investment income, which stocks, interest, crypto, dividends, and just, yeah, you saw it. We just walked through all of it. And this is where you pay. And you confirm payments, and then you're good. You're gonna get this e-filed, and then, well, that's gonna be the quickest way that, you know, you file a tax return. You can always print it out and mail it in, like hard copy, snail mail. And you're gonna get the option for direct deposits. If you owe money, you can do electronic withdrawal. But that's it. I walked you through the whole tax return. You just finish up this last portion of it, and then you file it. Very straightforward. I don't think that requires an explanation. But that's it. Thank you so much. That was fun.